Are you guys tired of losing money in this recession? Well, what if I told you there's a way to make money if the market goes up a little bit, sideways, or down? Well, in today's video, I want to show you a strategy that can make money in all three environments. And this strategy I'm going to use on Tesla right now because I'm slightly bearish on Tesla's movement. The stock has been moving lower, and what I want to do is I want to open up a call credit spread. This is a strategy that I'm going to run on Tesla, and basically the strategy is this. It's selling one call option and making money, and then protecting yourself by buying another call option. So when you do that, basically what's going to happen is you can deploy a very small amount of money, and you can make a very high return on a small amount of money. In fact, if you look at my portfolio right now, I'm actually running this strategy. You can see right here that I have the 285, 290 call credit spread, the 370, 380 call credit spread, and also, again, the 370, 380 call credit spread. Now, on all of these, I'm actually up a lot of money. I'm up about $978 on all of these positions right here. And that's because I am selling call credit spreads because of the weakness in Tesla. Now, I'm a long-term bull on Tesla, but in the short term, it doesn't look really good. In the short term, it looks like Tesla's going to have more pain. And if Tesla has more pain, call credit spreads will make money. If Tesla goes sideways, then call credit spreads will also make money. And even if Tesla goes up, and let's say that it's going to go up back to this little area right here of $275 per share. Well, even if it goes up a very, very significant amount, a call credit spread can still make money. So it's very important in this video that you stick through and watch exactly how I'm going to open up this call credit spread. But first, make sure that you do subscribe to the channel. And also in the description, I have a link to the Ultimate Option Income Academy where you can watch all of my trades and get coaching from me personally. Now, what I'm going to do is I'm going to open up this call credit spread. So I'm going to go to trade Tesla options. Now you can do this in any broker. It doesn't matter which broker that you use. I like Robinhood because it's very simple and easy to use. So now what I'm going to do is I'm going to click sell call option. Now, the first thing I'm going to do is sell a call option because, well, the way that you make money with trading is you sell options. This is how you can make money in any market environment. But specifically, selling a call option means that you're bearish on the stock, okay? So I'm gonna go sell call option. I'm gonna show you a way where even if the stock goes up, you can still make money. Selling call options and call credit spreads right now in this recession is how you beat the market. You beat the market by being against the market when it's going to go down. So when it's in a bear market, you can make money as it falls. Or because we can't really predict the market, so long as the market doesn't rise a lot, then you can make money with call credit spreads. See, in a bear market, there are rallies all the time. In a bear market, there could be rallies of 3 to 5% in a day, or even maybe 7% a week. But as long as you sell a call credit spread that's farther out of the money than that, well, then you're in good hands. So what I'm going to do is I'm going to pick an expiration, going to look for, so it is the 13th of October. I'm going to go out about a month, okay? So I like monthly options. I also like weekly options. But for call credit spreads, since it's a small position and because many people out there are working with a small portfolio, and also many people are working with some commissions and fees, so maybe you're not using Robinhood. Either way, it's smart to go out about 4 to 5 weeks at times. And that's because even if you're using Robinhood, for example, let me just expand this option right here. Check it out. The bid is 264, and now the ask is 273. So even though Robinhood doesn't have any fees explicitly, implicitly, there's kind of a fee. Because if you were to buy this option, you wouldn't buy it at 264. You would get some in-between price, maybe at 269. And if you were to sell this option, you wouldn't sell it at 273, you would sell it at 269. So you're kind of losing $5 either way every time you buy or sell. And for that reason, it's not that smart to do a call credit spread on a very short-term expiration. It's much better to do 4 to 5 weeks out. So anyways, that's why I picked November 18. Now for Tesla, I'm not even gonna look at the technical chart because Tesla's a very wild stock. There's no predicting this stock. If you were able to predict it, then why aren't you a multimillionaire? And if Cathie Wood was able to predict it, why is Cathie Wood down 63% in 2022, which is more than double what I am down? So Obviously, the smartest investors, the best investors, or the most influential people on YouTube just don't really have it right. So for that reason, there's no point of looking at a technical chart because that doesn't really work for Tesla. But what does work is simple logic. So Tesla is $217 per share. Okay, simple logic will tell me that this stock can't really shoot up by 20% in a very short amount of time. It could, and there are earnings coming, but honestly, this stock is not going to shoot up 20% or more unless it reports really good earnings, which if you look at the market, I don't really expect them to have the best earnings. Although I don't expect it to be bad, I expect Tesla to hover around where it's at today. In fact, in the short term, I'm kind of bearish, and that's just because of the crazy stuff that Elon Musk is doing. He's having his head all over the place, he's getting some women pregnant, and he's just not really paying attention to what needs to be happening with Tesla at the moment. Although I'm bullish, still a lot of warning signs for me. So what I want to do is I want to look at a 20% out of the money option. So going to buy, and basically right here, Robinhood will tell me around where 20% of the money is, which is right around here, 260 per share. So 20% of 220. So around this area is a 21% break even. It is factoring in the premium. That's why I want to go a little bit higher to maybe 265 because the premium here is actually being factored in. That's why it says 23%. So anyways, back to sell call option, okay? I'm going to sell the 265. That's because there's an 88 chance of profit, very low delta, and this is, more than 20% out of the money. So that's good in about 5 weeks. 20%, 5 weeks, that's 4% a week. I really, really doubt that Tesla's gonna go up 4% a week for 5 weeks straight. Okay, so I'm gonna go ahead and sell this call option at 265, okay? And now I'm going to buy a call option. So you could buy the next leg up. It's kind of weird because Tesla basically had a split, or I can skip one strike and go to 270. I'm gonna go for 270, and basically this right here is a gap of $5. A gap of $5 means that you're risking just $500 because you're selling this option, it's more expensive. You see it's $385. Now, you're buying this option and it's less expensive at $330. So you're selling something for $385, pocketing $385, and then you're buying something for $330, okay? So you are making the difference here. The difference is $55. So that's about how much you're going to make. Now the max profit here says 68. So maybe that's because Robinhood isn't open yet. There's a slight glitch, whatever. Let's just call it 60 bucks, somewhere in between. So you're making 60 bucks, and then on the max loss, you're risking about $440, okay? That's because it's 500 minus the $60 that you're making, which is $440. So if you take $60 and divide it by 440, that's basically around 13, maybe 13.5% return. So you're making a 13% return roughly in 5 weeks, which is about 2%, actually a little bit more than 2% a week. So this is how you scale a small portfolio, but also this is how you make money when the market is going down. So if the market goes down and Tesla falls, this position is going to benefit. That's because a call credit spread is a bearish strategy. And actually, even if the stock were to go up, if it went up to 250 per share, this would actually still be fine. As long as it doesn't go past 265, you're actually fine. You're gonna make money by expiration. Now, I do wanna talk about how to close, and a lot of people ask me about how do I close a spread? Well, this is really important because it really just depends, and everyone's going to close a spread differently. I would say when you close an option position, there's actually no set rule. Everyone's going to have a different rule, but I will tell you what I personally do, and I'll also tell you what my students in my private Discord community do. So here's the best practice. When you sell a call credit spread, okay, you're expecting the stock not to rise. Say that the stock does end up rising. It goes up to 200 and so here is the chart, okay? This is $265 per share, okay? This would be less. This would be like 250, 240, 230, and this would be 270, 280, whatever, right? So long as the stock stays below 265, you're gonna have all this green area, right? This is all profit, okay? And this profit right here is again going to be $60, all right? So $60 so long as the stock stays below 265. However, now if it goes above 265, you can start losing money. And specifically, your break-even point is right here. it's actually not going to be 265. It's going to be 265 plus what you collected. So it's going to be 265. Okay, that is the break even, but because you collected 60 cents per contract or $65, your break even is actually going to be 265.60, okay? And then below, it's going to be a loss. Now let me explain to you how I would close this, okay? Because there's a lot that can happen in between, and this option doesn't really function linearly. What I mean by that is basically, if the stock were to go up really, really fast in the next day, right? So if it went from $212 per share or 217, right? And it went up to 250, okay? This position would be out of the money, right? It would be somewhere here, right? So in theory, you should still be in the green. And you are in the green because the option is not in the money. However, because the volatility has increased and because this option gained so much value and now it's at a bigger risk and it's so close to the money in a very short amount of time, you're going to be down on the option, okay? You're just going to be down on this option. Now, you could be down, let's say, $200, which would be a lot of money, right? So your maximum loss right here, by the way, is going to be negative 440, okay? So you could be down actually about $200 in one day. That is possible, okay? Not the best artist here, although my dad is a painter. So you could be down like $200. However, I wouldn't necessarily close this option. And that's because it's still out of the money. So the option will be a huge negative and it might look worrying. And if you were to buy it back, you would lose money. But if you don't buy it back and you wait, and let's say that the stock ends up coming down a little bit over the next couple of weeks, then this option position is going to gain some value and it's not going to be as huge of a loss. I personally do not close an option until it's right around this area, okay? This area, and it also depends on time. So if it goes to this area in one day, honestly, I'm not gonna do anything because there's so much more time for the stock to move back up into, into this area, right? There's a lot that can happen. However, if the option is very close to expiration, so this option is for November 18, okay? November 18. All right. So for November 18, this does not look that beautiful, but for November 18, let's say that it's November 16, and the option is right around here, the break even, I would close this option. As soon as this option is near its break even and there's not that much time left, okay, I'm going to end up closing this option. If the option is below break even, but there's a lot of time left, I'm not going to close the option because there's still a lot of time left, a lot can happen. Now, if this option position is approaching November 18, so it's November like 14, 13, 12, 11, right, whatever, and it's in this area, then this is your good area. This is your happy area. You don't need to do anything in this area, okay? In this area, you are golden. Now, in this area, you have to think about if you want to close, okay? I personally close if there's not that much time left. So how do you really determine if there's much time left? So if this is a 5-week option, okay, 3 weeks is still a lot of time. 2 weeks is kind of a lot of time. 1 week is not that much time. So in the very last week, if I'm in this area, I'm going to close before November 18. And I'll tell you why. Because this option position is going to be down, right? The one that you sold. So the call that you sold will be down, but the call that you bought is actually going to be making some money. So when you close this option, you won't lose this 440 completely. Maybe you'll lose 250, maybe 300, which is not too bad considering the delta of this option is very low, meaning that you're supposed to win a spread 9 out of 10 times, okay? And the one time that you lose, you're supposed to try to not lose the entire amount. And the way that I do that is basically by closing that option position in the last week, almost no matter what, if it's in this red area. And basically I hold all my winners up until expiration to get the most or the maximum amount of gain. And I don't close these options because not only does it cost money, but I also want to collect this full $60 without commission, without paying the bid-ask spread. So that's how I would do a call credit spread. And that's a call credit spread on Tesla. Make sure that you have these in your portfolio. Me personally, I have between 2 to 5% of my portfolio in call credit spreads at all times. For more videos about scaling a small portfolio, make sure to check out my playlist. Thanks for watching.